All right, guys, welcome to Diamond Ethical, where wealth is born of character. My name is Great Okonkwo, and this is the business finance, consultant group interview. So, without any further ado, let's get to it. So, there are four tenets or tiers of our business transaction, and they are the client, the affiliate, the distribution partners, which are you guys, the joint venture partner. Now, what are your responsibilities as a business financing or financial or finance consultant? Well, it is to conduct yourself in a professional manner when you reach out to small business owners who are seeking $25,000 plus of business capital in just 24 to 72 hours in order to grow their small business owners, or their small businesses, excuse me. So one of the things we do is we get you a free personalized landing page when when you come aboard with us, and you can work part time, which is less than like 20 hours per week, and earn in excess of $7,000 per month. So some of you would actually work even less than 10 hours per week and still be able to earn about $3,500 on average for their MCA deals. Plus, we do all the work, guys. So the beauty of the MCA program is that you could earn a full-time income doing a part-time work. How awesome is that? Well, let's start with defining the MCA. What is an MCA? What MCA stands for, merchant cash advance. So a merchant cash advance or MCA is technically not a loan, but rather a cash advance based upon the credit card sales of a business. Make sense? Well, a small business can apply for an MCA and have an advance deposited into their account fairly quickly. We're talking about 24 to 72 hours once they qualify, though. Now, they are daily and weekly repayment debited directly from the merchant's bank account, guys. So you know that. Explain that to your customers or clients. So the funds are advanced securely via direct access to the merchant's bank account. So the payback, though, is typically 20 to 40% of the borrowed amount. All right. So the question is, how does a merchant cash advance work? Well, an agreement is based on the business owner and an MCA provider regarding the advance amount, the payback amount, the holdback, and the terms of the advance. This is what the agreement is designed upon. So once the agreement is made, the advance is transferred to the business's bank account in exchange for a future percentage of credit card receipts. So submit the number one, the things that you have to understand is you have to submit an MC application. We already have that. Now the client gets approved in 72 hours, or they don't get approved. But once they get approved in 72 hours, the funds are wired directly to their bank account. And then the funds are used to grow their business. They can use the fund to do whatever they want. They can market with the funds. They can pay payroll with the funds. They can pay debt with the funds. They can buy equipment and inventory with the funds. Unlike some source of capital, you are limited in what you can do with the funds, in case you guys didn't know that. Well, what are the repayment and loan costs for this MCA program? Well, a business that uses a merchant cash advance will typically, like I said before, pay back 20 to 40% or even more of the borrowed amount. The reason this this program is in place is because it, um, how would I put it? It provides convenience because the clients or the business might need the funds right now or tomorrow, before something goes bad for their business. So this is in place for that. But with convenience comes a price. So that's why it's a higher payback rate. So the payback rate is called a factor rate, not an interest rate, guys. So what is a factor rate? It is specific to business funding, but it's less common than annual percentage rates, which is APRs, which incorporate interest rates and fees. That's what factor rates are. Now, factor rates are sometimes called buy rates. And here's what it's like. The advance amount, let's say the business borrows $10,000. The factor rate is 1.25%. And then we have the total payback amount, $12,500, because you multiply the amount the business is borrowing, they have to pay back at a 1.25 factor rate. You have to pay back 12,500. That's how it works, basically. So rates for a merchant cash advance can be much higher than other types of financing, and rates vary widely by provider. For some providers will charge more than others. So this type of financing does not build business credit because merchant cash advance providers they do not report to business credit reporting agencies, which is, could be a good and bad thing. I don't know, depending on how you see it. So what are the funding criteria? This is the part I want you guys to pay most attention to. Well, there is a minimum gross monthly revenue of $25,000. We need at least we need the business to be at least 3 to 12 months in business. We need 8 deposits minimum per month for them to qualify. So you see the credit score doesn't really matter. And we also need them to not have more than 5 negative balance days per month. So in a month or per day in a month, we don't want them to have more than 5 negative balances, okay, per day. Not more than 5. If it's more than 5, they do not qualify, basically. We also need them to complete an application, okay? Sign the application. We'll provide you guys with the application form, so you don't have a problem with that. And then we need them to turn in at least, we could request them to turn in more if need be, but at least 3 months of business bank statements, not personal bank statements, but business bank statements. And also, if applicable to the industry, we need them to turn in at least 3 months of processing statements as well. So there will be no credit card or credit pool required for the client, and no personal guarantee needed to secure this type of funding for the client, which again is convenience. So what is the compensation for you guys? Well, if you earn, well, you will earn, not if you earn, you will earn 6% of the payback amount. So if they're paying back 12.5 of $12,500, you earn 6% of that. And it can go up to 8% based on your monthly performance. Let's say you bring in a deal for about 500,000, you'll be earning 8% of 500,000, which is sweet, guys. If you think about it, an average financial advisor earns about $250, and we're talking about financial advisor who took the Series 6 and all that. Well, if you bring in about $500,000 at 8%, you're making 40 G's, guys, in a month. So you can earn up to 5% on renewals of the deal, and the payback amount of up to 6%. So it's pretty sweet. The minimum funding amount on this program is 25,000, guys. So keep in mind of that. And the maximum funding amount for this particular program is $250,000. So the minimum you will earn with our MCA funding program is $1,500 for every $25,000 deal we get funded for you. So in other words, if you submit $50,000 worth of deal that gets funded, you earn $3,000, which is amazing. And we pay out in as little as 7 days. So from the time the client gets funded, 7 more days, you get paid. Okay, it could be less. Now, if you submit only 10 deals, that gets funded at $50,000 each, you would have earned $30,000, guys. $30,000. And right now is a good time for businesses that need funding. For you to be in this business, now is a great time, guys. So here are some of the recommended industries: airlines, bakeries, building products, car sales. Well, not really car sales. No, we just scratched that off recently. So no auto sales, but credit protection, cruise ships, fencing, hotel businesses, marketing, moving companies, nail salons, online, pharmaceuticals, pawn shops, pool services, repair stations, restaurants, retail businesses, security services, staffing, and employment agencies. As a client, these are people you can target, guys. So you have a huge industry, widespread possibility here. So now we don't, like I said, auto sales, yeah, they're prohibited. We don't want auto sales for certain reasons. We don't want attorneys. They know how to manipulate stuff. We don't like that. We don't want truckers, trucking industry. No. We don't want that. They default a lot on loans. So we also don't want you to get default loans or default deals. Default deals means that the client has defaulted in an MCA program prior to coming to us. So those deals, we turn them down right away. So what are some incentive bonuses you would gain for being part of the program? Well, if you earn, when you, I'm not if and again, when you earn over $250,000 in commission paid, and you will qualify for an all expense paid Caribbean vacation. But voila, this is what it looks like. We're going to pay for you to go on a vacation. If you have a family, like you're married legally, you can bring your wife, or you can bring your husband and kids. We pay for all of them. Now, if you are single, we allow you to bring, a spouse, boyfriend or girlfriend. So that's when you earn over $250,000 in commissions. What does that mean? You would have brought in 14 funded deals, and now we're talking about, if each of these deals are $25,000 each. You could fund more than 25,000, but let's say each of the deals you bring in at 25,000 each, which is the minimum. You will have to bring in about 14 of those to earn 250,000 and qualify for an all expense paid vacation, Caribbean vacation trip. Now, when you earn $500,000 in commission paid, we get you a Tesla Model S. We get you a Tesla, guys. So it gets paid here, paid off, guys, with fully loaded Tesla. So you guys know, fully loaded. Now, for you to do that, you have to bring in only 28 funded deals. And this is assuming that each of these deals are just $25,000. So imagine you bring in a deal for 100,000. So the amount you have to make in a month will reduce. So this is just 28 of the minimum. That's how you have to bring in to earn that much and qualify for a fully loaded Tesla, yours. Now, when you become a superstar, man, you make $1 million a month, not a month, excuse me, $1 million a year, which is about 90,000, 80,000, 90,000 a month. We get you a home for $250,000, got paid off. Now, in order for you to, well, talking about, look at what the home is going to look like. Now, we pay it off. You can sell it back if you want to. It's up to you. Do whatever you want to do with it. But to do that, you have to bring in only 60 funded deals. And this is assuming, again, that each of these deals are the minimum of $25,000. It could be more, and they reduce the number for you. But you do this consistently for 12 months. That's when we calculate the year. So in other words, you have to work for, invest in your business for 12 months and make your family whole again. So what are some prospecting tools you could use? Well, Craigslist, $5 ads. One of our affiliates are bringing like over 100 deals a week. Not all the deals gets funded, but at least 100 people are requesting to get funded. That's a lot. You have more potential there than just bringing 2 or 3 a week. But he pays about $5 or so and puts it in different markets. So people contact him, he speaks to them and all that. The other is Facebook ads. You use Facebook ads to attract clients. We have Google ads. If you know anything about that, it attracts clients as well. You have USA Today, very expensive, but the quality of clients are more sophisticated with USA Today. And you could build a landing page, use organic SEO to generate clients. You could cold call. You don't have to do it yourself. If you don't want to, you can hire someone from Upworks and they do it for you. But yeah, you could cold call clients that need funding. So the funded amount could be higher. Therefore, the amount you earn could be higher as well. Just like I said, if you're bringing in about 60 clients with each of them at $25,000 minimum, if you bring in 150,000, it reduces that number for you. But that's going to mean that you're going to earn more, basically. So our goal is for you to submit about 30 plus clients each month, which is roughly about, and we're talking about funded clients each month. That's our goal for you, okay? Which is roughly about 1 client per day, guys. So with that, you could be earning $45,000 in just 1 month. And then that's $540,000 per year. Most of you are going to be like, this is crazy. But yes, it is crazy. And that's what it does. So the business finance consultant position pays about 50,000 to $1 million plus, depending on how high you want to go. You could go more. You could build your own team to be even larger than you thought. But yeah, that's how it works. So the next step is, guys, if you have questions, email. If you want to go to the next step, yes, just email us at info@diamondethical.com and we'll go from there, guys. It's a pleasure talking to you guys. Thank you for watching. This is Diamond Ethical, Wealth Born of Character. My name is Great. Have yourselves a blessed rest of your day. Bye-bye.